I'm really pleased to have the panelists here assembled on this stage. I'll let each of them introduce themselves as part of their first comments, just in the interest of time. But I think what you're going to hear is that one of the only mechanisms, if not the only, is to innovate our way out of these problems. And I think the investment community you'll hear over the course of this panel is really getting organized and mobilized around doing what is traditionally done, which is take technology innovation through the use of efficient capital deployment and translate it into commercializable solutions that, if at scale, might address some of these problems. So I'll lead off with a question regarding, we've discussed a lot of these problems. How do you, as investors, think about coalescing those into investment strategies? And indeed, to the previous panel, think about what's new in the context of this time period. We've tried different technology solutions before, so kind of a two-part question. What's new? And then how are you translating some of the themes and problems we've talked about into investment theses?
As a marketing person who spends a lot of time going out and looking for subtle relationships between needs and demand, I find this particular era one of the most exciting from a market perspective. We're not dealing with subtle differences here. We're dealing with the most basic of human commodities. We're dealing with water, we're dealing with air, we're dealing with healthcare, things that occupy the lowermost portion of Maslow's pyramid. So there's a criticality to this that creates a situation where this is not a demand-related market, it's a supply-related market. You don't have to convince anybody that they need water, like they do a flat-screen TV or a cell phone or a double-glazed window in a home. This is about the most basic of human needs. And being able to provide those is going to be, as they say, the critical aspect of solving this problem. The second factor is speed, and that kind of goes along with this idea of rapid response. The length of time between the recognition of the need and the actual criticality of that need is very small. I'm sure you read in the paper recently that there's a study that shows that Lake Mead has a 50% probability of drying up within the next 10 years. I call that a rather critical problem, especially if you're living in Southern California, since they're probably going to need water after that point in time. How is that going to be addressed? Clearly, organizations that can innovate and that can create solutions to issues like that are going to have tremendous opportunities to make a lot of money and to serve mankind very effectively.
Great. If you didn't guess, that was Bruce.
Yeah, I'm Bruce Harned. Sorry about that.
I'm Rick LeFaivre with OVP Venture Partners in Seattle. A couple of comments. The venture world operates as a function of disruption of technologies, disruption of markets. If you think back to when real venture value was created, it was the rise of the PC, it was the rise of the internet. We're now seeing the rise of what we call digital biology, the digitization of biology, where we're doing a lot of investing. Clearly, I don't think we've seen a disruption as big as what is happening right now. I've never seen a confluence of forces with global warming, with peak oil, with socio-political kinds of issues that are kind of impinging on this. So that means there is huge opportunity. The challenge is sorting through what's going on, understanding the technologies and figuring out where the opportunities are. And a lot of people are poking around the problem right now, and I'm very optimistic that there's going to be some very exciting things done over the next few years and already being done. So we'll get into some of that a little bit later, but I think it's an interesting time from a venture perspective in that regard.
Michael Pfeffer, Kolohala Ventures out of Hawaii. Living in Hawaii, we import 96% of our energy. We import about 85% of our food. That's not sustainable. And obviously, so Hawaii is, I think, a great metaphor for the world. And one of the reasons why we set our firm up there, well, aside from wanting to live in Hawaii and being from Hawaii, it's polar bear proof. They can't get out there when they come south to get you guys. But seriously, we're a lifeboat. We're an example. We want to be the green laboratory for the world. We want to show the world what we can do. And I think where we're at right now, as a species, as a planet, is we're a graduate student who's got a term paper due in about 6 hours, and we haven't started. we're out of time and we need to lead by example. I think we've seen that China and India, they're not going to change what they're doing until we give them a cost-effective alternative and until we show them that we are doing something about it. And so, Hawaii is a perfect lab for all things green. We can do just about every renewable, energy alternative you can think of. And my hope and ambition is that Hawaii can be an example for the rest of the United States. And the United States can be an example that we mean business. And Europe is already an example that we need to make a change. So we need to show the rest of the world that we can't go down this path and we need to stop now and turn the boat around.
And one of the things that's different about these areas than many of the areas that venture capital or indeed kind of private equity has made money before is in many of the circumstances previously, especially in the IT revolution, you were really investing against prospective markets. Here, for the most part, and I think Rick brought up a great point, you're investing primarily against existing markets. And so one of the questions I have is, as you look at industry structures that are already cast, political or NGOs that are operating in this area, what are the criteria, and indeed are they different than investment activities that, investment criteria that you've used in the past in other areas? Go ahead.
I think it's a bit of both. I think, in the sort of clean tech renewable space is actually in some ways very mature and very nascent. We've had, solar's been around forever, wind's been around forever. But I think what we're seeing now that still has that flair of a completely new technology you've never heard of is our computing power has come to the point where we can actually create new products that never existed before. And while they're in the same sphere, so it's a solar solution, but it's a completely new technology. So there is sort of a bit of both of that, where you are investing primarily in companies that are, you're replacing coal. I mean, that's a pretty mature industry. It's a couple hundred years old, right? We know what the pricing models are. And what we have to do is make the breakthroughs, find the technologies that are going to be efficient enough and cost effective enough to actually be able to replace those. So I don't know if that answers the question. But
I think the key thing that an investor looks at in looking at a venture is what is the market demand going to be? Yeah. I mean, that we spend more time talking about the market than the technology by far. And I think what's intriguing about this space is that it's only recently we're beginning to get a sense that maybe the tipping point is happening in terms of the public perception. There have been a lot of people talking about it for a long time, but especially in the US, we have not seen, the demand in terms of the market need being clear. $4 a gallon gas, going to maybe higher, understanding more deeply what's going on with global warming, understanding what's going on with the Middle East and all of our political issues there. I think finally we're beginning to see, and so you're seeing that with solar, you're seeing that with clean water, we're seeing investments in all these spaces. So I think we're at a tipping point now where all of a sudden this stuff gets very, very interesting in terms of the demand pull side of the equation.
Especially here in the United States.
Yeah.
As Mark said 6 months ago, the good news is global warming is not your grandkids' problem. The bad news is it's your problem. So I think even a lot of Americans are starting to see that, and you're right from the demand side. But it's different because in this case, what we're doing is we're saving the planet, we're saving ourselves. Whereas in the .com era, we're creating a better website for pets.com has been the running joke, I think, of the conference.
Right.
And it's very different when you're creating something that could potentially save the world.
Yeah. So in the last couple of panels, we've had a discussion around the cost of carbon and the role of government organizations and the portending of what would happen if we stay on the current course. One thing, a glimpse of hope, just today, the Bay Area, meaning San Francisco, Air Quality Management District passed for the first time ever in the United States a tax on carbon, and it passed 15-1 on the Air Quality Management Board. It's the first type of that tax for manufacturers that produce products and services in the Bay Area. So there indeed seem to be some of the leading indicators, certainly done at a regional level first before even state or federal. But how do you think about, as investors, some of the issues that we might have here around, navigating difficult value chains where there's a constriction on either distribution or marketing or service, dealing with permitting bodies, dealing with the capital intensity, and indeed to really have an impact, some of these technologies have to achieve, relatively fantastic scale to have an impact, as we've seen, to the scale of the problem from previous panels.
Well,
how do you think about that?
Well, the gravity is certainly greater than in earlier eras, but the rules are still the same. I mean, there are three aspects that any good investors should look at, and the first is need, and that's defined by the consumers, if you will. So, for example, if you're talking about a need in Africa, it should be based on what the Africans need, not what we think they need. There's product, which obviously has to be legitimate and solve the problem, and there needs to be due diligence as far as that's concerned. And there needs to be process. In other words, how are you going to deliver this? You may have the greatest product in the world, but if you can't get it to the various entities that need it, it's not going to work, obviously. And the issue, of course, is the fact that we're dealing with, in many instances, new technologies, new theories, new processes that we don't understand yet. So clearly there needs to be a tremendous amount of thought put into the logic of some of the business propositions that are being put forward here. I mean, let's face it, we're talking about trillions of dollars, four common numbers, as they say, and that's going to attract a lot of activity and make the dot-com bubble look pretty small if things don't work out well. So clearly an effective implementation of those three factors is critical to make sure that this thing's going to work.
I think one thing you can do is if you understand what are these obstacles you're talking about and turn them into an investment opportunity. I'll give you an example. We've seen a couple of companies here this week that are directly attacking the carbon problem with coming up with ways to create value around carbon trading. There are some derivative effects to this carbon trading thing. And we've just invested in a company that I don't think has been announced yet, so this is not a public announcement. But it is a software as a service infrastructure provider for carbon trading that basically handles all the paperwork and all the regulations and regulatory stuff, and they're linked up with the UN and et cetera. And so there's a lot of complexity that goes into this whole carbon trading thing, and there are opportunities to attack that complexity directly. So I think you look for both direct applications to invest and also what are the derivative effects that are kind of emerging as this whole thing begins to play out.
Well, I think Elon Musk's panel a couple of days ago talking about his solar company. I mean, there's an example of a guy just doing it. But what I found intriguing about his presentation was a big part of the success of that company has nothing to do with the technology. Right? It has nothing to do with the solar panels. Has everything to do with the financial instrument they created to make it work. So they took a problem and created a financial instrument solution around that problem and got way out in front of everybody else with their company. And it really isn't about the technology. And Martin Tobias and I were talking about this. We're starting to see more opportunities in what you just talked about with the software company, opportunities that aren't really creating the next new solar technology or a better windmill or a better OTEC conversion process. It's about putting together the different aspects of the supply chain and the government regulations and all of that, and finding better ways to be more efficient and cost effective there to make these technologies work.
Yeah.
So it's one thing we really look at. But the other point I would say from a business side, we talked about this before the panel. It's not our jobs to save the world necessarily. That's not what venture capitalists are defined as. Specifically, our job is to make money for our limited partners. And we have to keep that in mind. And if at the same time you can save the world and and do the rest of it, that's great. But one of the things that we're seeing, we're very early stage in Hawaii in terms of our firm's investment profile. And you talked about the time to market. You don't have as much time anymore, and you don't have the luxury of making virtually any mistakes. And in this sphere, everyone around the world seems to get it. So you may think you have the best technology in some startup, and there's 5 guys in Israel trying to do the same thing with more money, and you really have to. This flat Earth thing can be a problem from a venture perspective. You really have to work with your portfolio companies to make sure A, they're the right idea, and B, that they execute incredibly well, because you don't have some of the luxuries we had in years past.
Yeah, let's pivot off of one of your comments about how this is going to be measured. So it'd be interesting to hear from each of the panelists. Are there measures other than rate of return or cash on cash multiple? Are there ways that your investors or some of your clients are thinking about this either from other potential currencies, i.e. CO2 averted, quality of life issues for their employees, some other dimension of return or performance that should be included when you look at these type of investments? Or is it really just straight and narrow, I'm here to turn $1 into $12?
You want the idealistic answer or do you want the actual answer?
The actual
I
answer.
think Michael put it well. I mean, fundamentally, our investors, need to see a return. That's, we work for them. I think it's nice when you can also feel like you're doing something good for the world, in addition to creating a return. But understanding the profit, where are the profit models? And someone said earlier, and it almost sounded kind of negative, that, wow, in the U.S. we're after profit. But, that's how this game works. That's how capitalism works, is where are the profits to be made by existing companies or new companies to begin to attack these problems?
I think, a lot's been made about the so-called triple bottom line, right? And we try to practice that with our firm. We invest in companies where there's a social value, an environmental value, and a financial value. And I think what's interesting, a very overused term in technology has been convergence, right? Convergence. But those three things have converged in this sphere, right? If you invest in a successful renewable energy company, you're doing all of those things. You're doing good for yourself and your family and people who live on this earth. You're doing good for the environment, and all the animals, so the polar bears have a chance to survive. And, you're going to make money because it's a great opportunity. And so I think for the first time in history, perhaps, this sector it's not just about making money, we're saving ourselves at the same time. And I think we've seen that in excruciatingly painful presentations here. We're in trouble. and so those things together, I think we do look at that. And I think the best example might be Whole Foods. People are willing to pay more for organically grown foods and locally grown produce. They'll pay even more than that. So people are willing to pay a premium for things that aren't just about money.
Yeah.
I think the other very real need here is to remain flexible in measures. I mean, certainly return is the critical part of this, but we're not really certain yet what things are going to cause people to be attracted to certain investments and to buy certain products. It's an emerging process. I mean, like I say, we're dealing with the most basic of human needs. There are going to be offshoots of that are going to have to be developed for all of this to come together and work. And we're going to have to, as I say, be very careful to monitor to make sure that we're not just focusing on return or focusing on being green or focusing on some other aspect of this process. It's going to include a lot of things, and we're going to have to make sure we're going after the ones that are going to make the biggest difference.
Yeah, interesting. One of the struggles I think you see in technologies in these areas, and probably best exemplified in something like a Whole Foods. Do you believe the greater opportunity is to do premium positioned products, i.e. a Whole Foods kind of, or a Toyota Prius, which is really on a net consumer basis, not a particularly green investment, although it's positioned from a fashion perspective and a market perspective to be that way? Do you think the bigger opportunity near term is to focus on kind of the premium green segments, or to focus on the cost less than coal segment, which is really a completely different value proposition? Is this a premium product strategy, or is this a cost strategy?
As a marketing person, I always go back to need. Obviously, you want to take a look at your own core capability and make sure you're matching that up. But I would go after the thing that is most likely to create the highest level of demand at the best possible price. If, for example, I was involved in some aspect of making sure that pure water was being delivered to parts of America or the rest of the world, I wouldn't necessarily focus on whether it was premium or not. Just make sure that you could get it out there. It's a tough question because it's totally relative to the absolute capability of your company.
Well, if you personalize it just in one value chain, right, you end up with the high-end all-electric Roadster,
Right.
and the Tata Nano.
Right.
Right. I mean, just as one value chain analysis.
But I think Bruce put it well. It really depends on what your core competencies are as a firm. For example, we don't tend to invest in end consumer applications because we think that's brand building and distribution and the kinds of things that is not our expertise. We tend to be more technologists. So we'll be looking at what are the underlying technologies that feed into this. And a comment on that, if you think about what does it mean to be an energy investor, We know what it means to be a semiconductor investor or a enterprise software investor or a materials investor. Energy leverages all those. And so the nice thing for us VCs that have been around for a while is, we've done a lot of investments in technology areas that can now be applied to energy, whether it's software as a service applied to energy, whether it's advanced materials applied to energy, whether it's biotech applied to energy in terms of enzymes, et cetera. So we're leveraging a lot of our understandings over the past 20 years of venture investing now with this new kind of set of problems and application areas.
Mm-hmm. Yeah, and I think it really is dependent on, we try to have a mix of stuff in our portfolio. So we've got some stuff that's more near term, some that's longer term. I think some of the plays that you look for are, the long term, it's going to be the next big winner in alternative energy. Some are nearer term solutions, but I think the real difference that we're looking at is, you mentioned consumer, some of these technologies are really focused on, households. Some of them are focused on commercial buildings like this. And then you've got the whole utility side. And at that scale, it's a very different game. Trying to hook non-firm power into legacy firm power grids is an extraordinarily difficult process and a very expensive process. And so, you have to really define that market that you're going after. Who is the customer for the product of the company that you're investing in?
Yeah. Let's turn to the one dimension of building companies we haven't talked about yet, which is management. So if we think back to semiconductors, we're probably on generation 7.0 of entrepreneurs. Companies typically last 5 to 7 years on a venture cycle, and we've been doing this 30 to 45 years from a semiconductor perspective. In enterprise software, we're probably on entrepreneur 5.0. In Cleantech, we're pretty squarely on entrepreneur 1.0. Where's management going to come from for these companies?
Well, I'll take a crack at that. We are seeing a tremendous number of refugees from existing markets going into this area because of the passion surrounding it. So, we've got companies where very experienced software executives who, are good managers and they know how to build companies and hire people and et cetera, are passionate about what's happening in terms of clean, green, sustainable energy and are starting companies in that space. So we're seeing seasoned managers, not seasoned energy managers, if I can use that term, but very seasoned managers, because this is such a compelling thing that so many people are excited about, are being drawn to it, almost like as a life calling. So that makes it very exciting.
I think it's the biggest problem, has always been in any kind of venture industry, and the biggest potential. Scientists and entrepreneurs are generally very bad business managers to take a company to scale, to grow it out. In fact, to shamelessly plug the two companies that we brought, both John Bauer and Bill Spencer, neither one of them are the scientists who created, John couldn't program himself out of a box, and Bill's not an ahi geneticist, but they're seasoned business leaders. And I think that's really what you need more than ever now. It's absolutely the crucial piece, is to bring guys in who know how to build a company and get it to market, whether or not they're in the industry or have been in the industry, or whether they're the scientists who develop it. That's the worst person to have in charge. And more than ever now, I think you need to bring those guys in early and have them build the business. And business is business. I don't think they have to be in the energy industry, but they need to be good business leaders.
With passion.
With passion, yeah.
The concept of refugees is a good one, because I think there are a lot of people in these more structural industries, utilities, et cetera, that perhaps have been frustrated by the lack of growth and the lack of innovation over years. And I think these are your eventual disruptors, because that's essentially what we're talking about here. We're talking about disruptive technology beginning to take over from the more steady offerings that we've had. And that I think, I can speak from having spent a lot of years in industries like that. It'll be a very refreshing thing for these people to be able to start to do this kind of stuff. That this availability of opportunities is there will be good for all of us.
Mm-hmm. How are you thinking about the areas in which your companies operate or markets that they serve? Is it different in looking at these kind of clean tech or green industry areas? Are you more often finding companies that are addressing foreign markets? Clearly, one of the trends in venture over the last 15 years is to outsource manufacturing and/or put manufacturing in low-cost, high-competence labor markets. How is it different, if at all, in Cleantech, and are you finding yourself serving more international markets or doing them earlier in a life cycle?
Yeah, I think that one difference between this and some other areas we invest in is that there are more incumbents, large entrenched incumbents in the old paradigm with regulatory things, with subsidies, with a variety of things that kind of slow things down. So one of the challenges is for a young company to figure out how to navigate through that space and get approval to do what they want to do, figure out how to get around the incumbents, et cetera. I think that applies to the U.S. as well as internationally, so I don't see a big difference between that, but just in terms of the breakthrough aspects of getting into this market, I think it's challenging right now.
I think Hawaii is, again, a great example for the model, and that is Hawaii is kind of a gravity well. You don't want to make solar panels in Hawaii. Import the material, then export it. It costs a lot. We're great at creating great IP and exporting it all over the world. So at least in our Hawaii example, we're always thinking internationally and nationally, because we're not going to be making most of the stuff. There's some stuff that we'll actually make there, but most of it, create a great idea and then take that out to the world. So whether it's manufacturing or licensing or whatever it is, that's how we always look at it there.
I think the other exciting part about all this is that a lot of what is being done is transferable. For example, if you generate carbon credits in Southeast Asia, they reduce carbon dioxide for the world, which means that you can invest in opportunities outside the United States, for example, and still get a return that isn't necessarily directed at the United States. So I see a lot of that opening up, and probably a little less concern about whether you're in a particular country or not.
And also the fact that this world is flat, or spiky as we call it, but the entire world is looking at this problem. When we announced our investment in a company called M2E Power, which is a micro power generator, the day after the announcement, the day after the press release, both Apple and Nokia, so two parts of the inward bound calls saying, we want to find out what you're doing, we're interested. And so the entire world is watching what's going on in these spaces.
Great. With that, we just have a minute or two left. I wanted to open it up to the audience for questions.
Yes, we have a fund open. You can invest. It's not a problem.
Questions for the panelists? Okay.
That's a sign that we did a great job of answering all the questions before they were asked.
Exactly.
Well, I want to thank all of you for joining us today.
Thank you, Eric.
Thanks.
Either that or we lulled them all to sleep, one of the two.